Welcome to Alpha Insights. I'm Kristen, your market-savvy social host. Today we're unpacking a corporate philanthropy update that has implications for environmental cleanup and ESG watchers. Joining me is James, a London-based analyst who looks at the intersection of corporate action and investor signal. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks for having me, Kristen. Great to be here.
Okay, so give us the headline in plain English. What happened?
Sure. Yesterday, the Gracekennedy Foundation said its 36th annual public lecture will take place in the first week of June, timed to coincide with World Environment Day. And the focus will be an update on the Kingston Harbour cleanup project.
Interesting. So it's more than a talk. There's an actual cleanup project tied to it.
Exactly. The event is being used as a platform to highlight progress on remediation efforts in Kingston Harbour. And that kind of visibility can matter to a few groups: local stakeholders, regional policymakers, and importantly, impact-oriented investors. Right.
Walk me through why investors should actually care about a foundation lecture. I mean, it's a community event, right?
Good question. Think of it this way. Sustained corporate philanthropic engagement, like 36 years of annual public lectures, helps shape how a company or foundation is seen on environmental, social, and governance criteria, ESG. When a foundation publicizes progress on a major remediation project, it raises transparency and creates a short-term catalyst because new details or commitments can change the narrative around funding, timelines, and policy support.
Got it. So what specifically should investors listen for at the lecture?
Analysts will be watching for three concrete things. One, measurable progress and milestones on the cleanup, specific metrics. Two, any follow-on funding commitments or partnerships with government bodies. And three, timelines that show when remediation work will reach certain stages. Those elements give clarity on delivery and scale.
And if those things are announced, how might the market react?
Well, markets don't always move on foundation news alone, but the data suggests that clearer timelines and funding commitments can sway ESG-focused funds and municipal investors who track regional projects. It can also influence stakeholder expectations and potentially nudge policy decisions, which in turn affects longer-term economic planning in the area.
Makes sense.
To add to that, impact managers will be looking to translate those public commitments into measurable outcomes. If the lecture includes quantified reductions in contaminants, restored habitats, or new public-private partnerships, it becomes easier for analysts to assess credibility and momentum.
So you're saying it's about credibility and follow-through, not just headlines.
Exactly. Headlines are great for attention, but investors and funds care about verifiable progress. A one-off statement without data won't move the needle for institutional ESG scores.
Yeah, that's a good point.
And one tempering factor: environmental remediation often takes years, and there can be disappointing setbacks. So even positive announcements need to be viewed in the context of long timelines and technical complexity.
Honestly, I was a bit surprised by this one.
It's a reminder that long-running philanthropic programs can act as ongoing signals to markets, especially when they align with public events like World Environment Day that bring broad attention.
Okay, practical takeaways. What should listeners be doing after the lecture?
Analysts note a few practical steps. Monitor the foundation's follow-up reports and press releases for detail. Watch municipal or regional filings that could reflect new policy or funding. Track ESG ratings agencies for any scoring changes. And keep an eye on statements from impact funds that focus on environmental remediation. These are all informational signals, not action directives.
Important to say, not financial advice, right?
Correct. This is informational only. I'm sharing what analysts are watching and what the likely implications could be, not giving personal investment advice or telling anyone to buy or sell anything.
Good. Short reactions, quick thoughts.
Watch for specifics.
Yep, measurable metrics.
And follow-up communications.
Concise, I like it.
Happy to be brief.
All right, let's end with a quick recap for listeners.
Sure.
Key takeaway 1. A long-running foundation event used for a project update becomes a short-term information catalyst. People watch for concrete numbers and commitments. Key takeaway 2. Analysts and impact investors look for measurable progress, funding pledges, and timelines. Those are the details that change sentiment. Key takeaway 3. Monitor post-lecture reports, municipal filings, and ESG ratings for follow-through. But remember, this is informational, not advice. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks so much, James.
Thanks, Kristen. Always a pleasure.